What's up, guys? This is Louis back with another episode of The Development. I have today a very good friend of mine, Asad. How you doing, Asad?
I'm good. I'm good. Thank you so much for having me, Louis.
Yes, no worry. Thank you for supporting the show, watching us, and I know Asad for like since high school, which
Time flies.
time flew so much, and everybody's doing their own thing now. I'm glad you're doing well and everything.
Appreciate it. Yep. Life is good. COVID is tough, but
Yep,
you got to do what you got to do, right? That's it.
definitely.
Yeah.
So Asad, tell us a little bit about yourself, what you do, and yeah.
So, it's been 10 years since high school. In the 10 years, I've been in mortgage industry. So what
Okay.
I do is basically help individuals find their first home or refinance their home. One of the things I've realized over the years is how can I help people? That's one of the biggest things that I love to do is help individuals answer questions, and that's why I went into this field is because this is an industry where people are confused. They don't know because if you don't specialize in it, you won't know what you're doing, what you're looking for, and that's why I did it. I wanted
Yeah.
to get into this field and help people,
Yeah,
and
yeah.
that's what I do. Yep.
Yeah, definitely. There's a lot of places that will help with like getting mortgage or lending, and sometimes it could be very confusing because it'll go on either credit or like it goes on how like your credit score is. It's very crazy. It's very crazy.
Absolutely. And many things that I've seen over the years is there's two types of loan officers out there. One that are willing to help you and have a conversation for
Yeah.
free. And then there are those that right off the back is like, before I even sit with you, let's sign a contract.
Right.
And you got to be careful with those because
Yeah.
you don't want to be pulled into something that you are not comfortable with and you don't know any information about. And that is why I'm here to help, give advice absolutely free, to educate, because I think that's the key. Knowledge is power.
Definitely. I definitely agree with you 100% on that. Contracts are very scary at times, and a lot of people will just throw it right in your face before you even get started with anything. It's just like, wait, I want to know more about everything I'm getting myself into. And then they're like, no, here's this. This is what we're about to do. And you're just like, and a lot of people get scared. And I per se, me, like I would get scared when I gotta make sure I read everything on that contract before
Absolutely.
signing my
And
life away.
the easiest thing about people and getting misunderstood is when you trust someone, right? And they're like, hey, you want to buy a new phone? Just sign A, B, and C, and
Yeah,
then boom, 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 you get your phone. But you really don't know what you're signing away, especially when you're doing mortgages. Oh,
yeah,
you got so much signatures, so that's why they need lawyers involved in this
yeah,
because it's tough. And some lawyers even sometimes take their time reading it to understand because you really don't know what the guidelines are, and
yeah,
that's why we hire individuals to do that for you.
yeah. So, tell us, how would anyone or me per se, how would I qualify for a mortgage? Let's say if I was looking to, let's say get a house.
Perfect. The very first thing I personally would do is have a conversation because purchasing a home, as the person who's trying to help you get your first home or an investment home, I have to get a better understanding of who you are and what you're looking for. So the very first thing I'm going to ask is, what are you looking for? Or what is your primary objective? Do you intend to live in that house? Do you want to rent out that house? What is your long-term objectives? Because if you're planning on selling the property within the next 5 to 10 years, there's a different loan process for you compared
Okay.
to if you plan on living there for 30 years or more, or pass it down from one family to another. So that's the very first thing I would ask is, what's your objective? Do you want to live in the house, or do you want to sell the house or rent the house? From
Okay.
there we go in depth and get a better conversation going with income, uh, liabilities. Can you afford it? Because one thing I personally say is, I never sign anybody up for a loan that I feel like I personally would not feel comfortable living in it,
Right.
because everyone's life changes, situations change, and you got to be mindful of that.
Yeah. Yeah.
So,
Um,
those are the basics that I would definitely ask.
definitely, definitely. So, since you brought up that topic of renting, I'm assuming like, do you get? a lot of people that be like, oh, I'm only getting this house to do Airbnb, let's say.
I do. And that is absolutely fine. Honestly, if you want to do Airbnb, look, that's a big business right now and it's growing as we speak.
Yeah,
But at the end of the day, as your advisor, I would say, in
yeah,
your home, I would first tell you the negative because I always start off with the negative because the positive is awesome. Someone's living in your house for a day, a week. You're getting that residual income, that income that's coming in.
yeah,
Awesome. But worst case scenario, what if you can't find someone? Like, for example, COVID, right? This
yeah.
is a perfect scenario where someone cannot rent out Airbnb because people don't want to live in your house because they're
Right.
not comfortable. Is this sanitary? Is this safe? What if I end up catching COVID? And there's a lot of rules and restrictions against that as well. So in that scenario, can you personally pay for that mortgage if you're not getting somebody to rent it out? These are things that I personally like to put on the table before I even have that conversation. Because if I don't educate you, trust me, when things go wrong, you will think of me
Yeah.
and you'll be coming back to me and be like, you didn't recommend this or you gave me the
Right.
wrong product. Why you did that? You never want that to be the outcome.
Right. Right. You're definitely correct. We would definitely fall back
Yeah.
on you because you are our advisor. You are helping us. You're giving us a time and day to like be like, hey, like this is what you need to do. This is the good. This is the bad. You're definitely right. So what is the big difference for our viewers for between getting pre-qualified and then pre-approved?
So many times, what people do is they get a misunderstanding between pre approved and pre qualification. The biggest difference, the biggest similarity, let's start with that, is
Yeah.
it allows you to go look for a home, right?
Yeah.
That's the biggest similarity. Whenever you go to a real estate agent or a broker, and the first thing they ask is, were you pre qualified or pre approved? Many times, the term they use is pre approved. And 99% of the time, they don't know the person who's going for the power, they don't know what that is,
Right.
but they have a letter. So the difference is very simple. Pre-qualification is me basically sitting with you, having that open dialogue, having that conversation, and going like, "Hey, what's your income?" And this is all a conversation. You
Right.
never gave me your pay stubs. You never gave me your tax return. You never gave me your W-2 or your credit score. I didn't even run it, to be honest. All I
Right.
did was have that conversation. I did my due diligence, and according to my experience, I think you qualify for this much. That's a pre-qualification.
Right.
Where pre-approval is before you even start searching for a property, what you have to do is your mortgage broker, mortgage agent, mortgage officer, what they would do is ask you straight up, they'll be like, can I get your pay stubs? Can I get your bank statement? Can I get your tax return and your W-2? The
Right.
reason is I'm doing a pre-approval for you. So once you have that property, within 2 to 3 weeks, we close that loan, that property is yours. It's that simple. Where pre-qualification could take 30 to 90 days because technically you're still in that phase of still getting approved technically.
Got it. Got it. Is it when I know I probably know the answer to this, but is pre-approved or pre-qualified when getting a house, is it similar to like getting a car, let's say?
No. So when you get a car, so basically when you go to a dealership, example, right?
Right.
You go straight to a dealership, and the dealership is like, there's two methods of purchasing a car. If you go to a bank, the bank is going to actually on the spot. They don't even say pre-qualification. They go like you're pre-approved for this much because they don't actually really take in consideration your income. They
Right.
only take in consideration your credit, and due to your credit, it's the rate that they're going to offer you. So if you go to a dealership and you're like, "Hey, I like that car. That BMW right there, that's $50,000. I want it." The first thing they do is run your credit, and they're like, "You've been approved for this much." Where if you go to a bank, they'll be like, "You have been pre-approved for this much." Once you have that car in mind, once you have that car that you want, we need the VIN number. Once you provide that VIN number, we will give you a check for that amount. But
Yeah.
there is no such thing as pre-qualification in the auto industry because they really have to run their due diligence and run your credit score and run your income just to make sure they could actually give it to you.
Okay. Okay. That's a good understanding. Um, so when looking into getting a house, either from like a two-story house to even a one-story house, how much house can someone afford? Like, how do you get to that step?
So, in order to determine that, many people come up to me and they're like, Assad, I want $1 million house. Oh, I want $1 million house too. But the real question is, can you afford it? In 2008 to 2012, we had the Great Recession. The recession took place only because every single person, you made $10,000 or $200,000, was getting approved for any and all properties, whether you can afford it or you cannot. And that's why we had that Great Depression. So right now, rules and regulation against that is very strict. So the very first thing I do when I have that open dialogue, open conversation with you is I ask you, first of all, I ask you, how much do you want to buy a house for? And because I want to know what you think a house is, because that way I could have that open conversation and explain to you what you should do or what you shouldn't do. So based on your income, we take 43%. That's to be on the safe side. 43% of your income per month that you make on a monthly basis is what you qualify for debt purposes. But there's a lot of things that go involved in it. If you have for example, you got no debt, right?
Right.
Uh, and you make $100,000 off the back, I can tell you you qualify for like $600,000 property off the back because of the experience I have. But because I have that experience, I could tell you that. But if I was a brand new person, I would have to calculate to see which one you qualify for. So I always first tell people there's two types of homes that people qualify for: the single family and two family, like you mentioned. The single family is something that you must pay the entire mortgage for. Where in a two family or more, you have that rental income that's coming in that will assist you in making that mortgage payment, which is better, but
Yeah.
not always the best. Because honestly, in the state of New York, uh, the tenant law is so strict that a tenant has the right not to pay rent for up to 6 months. So you, as the owner of the property, have to keep in consideration, what if my tenant doesn't pay? Like right now, due to COVID, I know so many individuals that are not paying rent to the owner, and the
Yeah.
owners are devastated. And it's sad, but it is true. And
Yeah.
so you as the owner have to make sure you can maintain that property. So that's my job. As the loan officer, as the financial advisor to your property, I got to make sure you qualify.
Got it.
And most of the times, what happens is a loan officer would tell the person, "Hey, you qualify for 600,000," and the person goes out and looking for a $600,000 property. No, 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 no! Don't do that,
Yeah.
because you got to keep yourself. If somebody tells you you qualify for 600, that's fine to look, but always do 50,000 to $100,000 less, because your monthly mortgage will be less, and that will allow you to save more money in the long term, rather than because then you won't have a backup cushion to
Yeah.
for emergency funds on a rainy day.
Got it. That's real smart to think about. Just cause like that would probably be me. Let's say I would be like, oh, I'm good for this. Let me find this. And then you don't think of the long term of like, wait, maybe I should find a little lower. That's good to know.
Loan officers always tell people, "Hey, you qualify for 600, so go find that 600." No, never do that. You need a loan officer that's on your side, that wants the benefit for you on the long term, because this is a relationship. A loan officer and someone who's going to them is a relationship, a trust-based business, and you don't want to ruin that. You really don't.
Definitely. So let's say me per se, and I'm looking for a new home and everything, and I got pre-approved, or I'm starting to look for that pre-approved or pre-qualified. How much would you think a person should save for a down payment?
Perfect. So there's different types of programs that people qualify for. Some programs are better than others, but remember, every human being, every process is different for everyone, due to credit, due to income, and due to how much you're going to put down. Because somebody can come to me and be like, "Hey, I want $1 million house and I have $100,000 I could put down." Awesome. Or you could be somebody who's like, I only have $15,000. What can I get out of it? Honest truth, you could still get a property. Many people say you need a lot of money to get a house. No, you do not, because there's different programs out there that will help you and assist you in getting that type of house you want.
Okay.
Personally, in America, especially in New York City, you need to have your own property. When you rent, you're paying the same thing as you would pay in a mortgage. Honestly, off
Yeah.
it's no questions asked. Rent is from $1,500 to $2,000 easy, which you can be doing or paying for your own property. Which that's what I tell every single person, no matter what your credit score is. Just ask. The advice is free, and we're here to help you understand how much you qualify for. So, in your question, how much do you need for down payment purposes? Easy. If you have 15,000, you qualify for certain houses. If you have 20,000, I would recommend something else. If you have 100,000, it all depends on you personally. If you're serious about buying a home,
Yeah.
all you have to do is, I would say, have $10 to $15,000 and ask a mortgage officer, please guide me or help me find that home that I want. And they will, I hope they will help you, because that's what I do. I believe in helping people find the right home for them. And even if you come to me and you ask me, hey, Assad, how much do I need? I will ask you several questions. What kind of house do you want? What kind of neighborhood do you want to live in? Are you comfortable with that? Then, after I assess the situation, then I'm going to tell you, okay, according to everything you told me, maybe we should save up for another year. Maybe we should save another 15,000, so that way you have a little cushion to move into a better community or a home of your choice rather than just moving to a home right now.
Got it. Got it. That's yeah, that's pretty
Yep.
smart that you have to put everything's perspective,
Yeah.
especially now, or especially during like COVID. I know a lot of people are I know like friends that are just like, I'm looking for a home, but it's kind of hard because COVID, or there's a lot of restrictions now that, like,
Yeah.
especially during this pandemic, is really crazy.
Yes, it is, and it's actually the mortgage industry even got more strict due to it, because a lot of people are out of work, are
Yeah.
furloughed, or laid off, because of all these situations, and life is happening to you per se. We
Yeah.
have to keep in consideration some rules. We have to be lenient in certain criterias and categories and income basis or debt basis. So, but if you don't ask those questions, you will never get a proper answer. And people, one of the funniest thing that I've faced is relatives asking relatives about financial advice when the other person doesn't even know what's going on, but they'll give their opinion.
Yeah.
Never do that. Always ask a financial professional who's willing to help you for
Okay.
that advice, because they specialize in that.
Yeah,
And they
definitely.
should do it for free too. Honestly, a lot of financial advisors like myself, we offer these advice for free because we want to make sure that you succeed. That's the objective in the end.
Got it. Got it. So let's say me, because I'm renting right now, but let's say I'm down to look for a new home. What type of home loans would you like offer for a first timer like me, let's say?
Perfect. So we could go retrace that same question back to how much do I need to put in down payment. There's different programs for different individuals. Like, for example, you don't have a home, you haven't purchased a home, so you qualify for FHA loan, first time home buyers loan. So what that basically allows you to do is, because you're a first time home buyer, the government is offering you a FHA loan where, instead of the conventional method of putting 20% down, you
Got it.
only need to put 3.5%. So when you put 3.5%, it really helps you tremendously. Like, for example, if you're buying $100,000 property, right? In a conventional, you would have to put $20,000 for $100,000 property. Whereas if it's a FHA, it's $100,000 property. You're only putting down $3,500. If you compare the two, it's big difference.
That's
Big
definitely
difference.
the difference.
And on top of that, of course, there's closing costs, but that really doesn't pertain to how much you qualify for, because we're gonna take every your income into consideration. And as the mortgage officer, I'm gonna ask you these questions. The very first question I'm gonna ask is, how much do you have saved up to put down for a house? And if you say I have 20,000, I'm gonna personally look at those criterias and situation and the value of the home, and I'm gonna say, you know what? FHA is perfect for you because this house is $1 million, and you qualify for the FHA with 3.5%, and we will do everything. But there's a big rule. When you go from conventional to FHA, which is 20% to 3.5%, even though the numbers are very different, which is 20,000 compared to 3,500, there's something called a PMI that you must pay.
Mm,
And the reason you have to pay that is because of the fact that it's insurance, because you're putting so much the down payment that you're putting is so low that you must pay that insurance until your property reaches 20% or more of value. What that basically means is, say you did 100,000, you put 3,500. When you're consistently paying your mortgage, it's an additional payment that's going to be added to your mortgage. But
okay.
once you have surpassed, paid off 20,000 or more of that mortgage, PMI is out the door, and then you go back to paying a less amount. So it's basically pay less now, but monthly pay more, or pay more down for conventional and pay less monthly. That's basically the philosophy behind
Okay.
those two.
Okay. Okay. So since we're all in the topic of mortgage, what should people do when they need a mortgage?
The very first thing they should do is speak to someone who specializes in that field.
Okay.
A, go to a mortgage broker or go to the bank. The majority of the banks offer it. But one of the biggest things I would recommend you do is when you go into these individuals or speak to these individuals, whether it's a bank or a broker, the very first thing you should tell them is please do not run my credit. The reason is mortgage brokers and banks, what they do, if you don't tell them that, they're going to start, before even having a conversation, is going to start asking you for your personal information as well as your social security number to run it so that they could give you a better detailed answer to what the rate's going to be. But if you're shopping around, don't do that. Just ask them scenario questions
Got it.
because you just want to learn. You're not confident in that person yet to be giving them these information.
Right.
So go to banks. Matter of fact, go to the trusted bank that you bank with, whether it's
Okay.
TD, Chase, Capital One, wherever you go. Go to them and be like, I just have a couple of questions and I want to see where I stand in purchasing a home. They offer the information absolutely free because I've worked in banks before and I know they don't charge for that consultation.
Okay. Um, with the difference between a bank and a mortgage broker, what for let's say a first timer, what would you say? Like, do you feel like there's a difference and that maybe you should just go with your trusted banker or a brokerage mortgage would be better?
Very good question. And honestly, a lot of people have different opinions on this, but my personal opinion is go to a mortgage broker that has in-house uh, processing and underwriting. The reason behind that is if you go to a bank, the bank has rules and regulations that are already in place by Fannie Mae, Freddie Mac, which is the mortgage industry's federal policy holders or guidelines that
Mm,
they have to follow. So when you go into the bank, remember the person you're speaking to might not know a lot about the mortgage industry because they have checking, savings, annuities, retirement accounts. They have so much knowledge that they have to focus on. One thing I've learned over the years is focus on one specific topic or one specific subject that you want to specialize in. When you
okay.
go to a mortgage broker, they only specialize in mortgages. So they
Got
can tell you every single thing from the beginning to the end, the process, what to do. And that's my thing. Go to a mortgage broker for that consultation because they're going to give you the best advice, how fast the loan is going to be, what the loan is going to be, where it's going to take place, who's going to take place, who's going to take care of your loan. Those are specific things because mortgage brokers, at the end of the day, once the process is complete, they sell it to the banks.
got it.
Whereas, so they are in the market to sell to the banks. The banks are going to compete for your mortgage. So basically, what the broker does is find the best rate that suits you. And when you
Okay.
go to a bank, they're just going to give you the rate that they have. Whereas a broker is going to go to Wells Fargo, PNC, TD, and be like, you know what? TD is offering 3.5, but Wells Fargo is offering 3% to you. We're going to go with Wells Fargo. We look for the best for the client and not the other way around.
Got it. So it seems that does seem like a much better idea than just going straight forward to a bank. But I guess there's people prefer different things for whatever. So underwriting, you mentioned that. What I don't know what underwriting is. So what is underwriting and do you handle underwriting in
Yes.
in-house?
So So I'm actually a full-time underwriter as well as a full-time loan officer. So
Okay.
what that basically does, I have to do one or the other. So I do. So underwriters basically what their rules is they're certified to make sure this loan is actually good, meaning we verify that your income, what you state, is accurate from income to your credit score to your tax returns and your W 2. That is the underwriter's responsibility to make sure they fulfill every single questions the government might ask for compliance purposes. They're the operations team, auditors, I would say,
Okay.
uh, in a mortgage file. So if that uh, that broker has an in-house underwriting, expect your closing cost to be a lot less. Why? Because when you sell your underwriting to an outside party, it can be expensive because you're making somebody else do your file. So closing costs could go from 15,000 to 20,000 due to underwriting being elsewhere. Whereas if the underwriting is done in-house, the communication between you, the loan officer, and the underwriter is happening right away, and the responses are coming right away as well. So the communication is good, you save money, and at the same time your loan will be processed much quicker than any other institution. Whereas in a bank, because it's a banking system, they do have in-house underwriting, but because of the rules and restrictions against it, because they're following their in-house underwriting policy, whereas brokers follow a majority of the guidelines, that depends on where we are.
Mm.
It's much easier for a broker to do the underwriting quicker, easier than a bank, because banks must follow all compliance rules, because majority of the time they don't sell their mortgages, they keep it in house, whereas a broker will have to sell it, and to sell it they got to make sure the banks they follow the bank's rules and regulations. So it's much easier, quicker, and saves you a lot of money.
Got it. Got it. Okay, that I understand a little more. So, I understand you spoke about you giving free advice compared to somebody else that would probably charge. Why would that person charge and give a contract compared to you just giving? Why would somebody want to go to somebody that'll charge than you just giving them just going to you and giving them the free advice?
Very simple. At the end of the day, the market, it's just like buying a home, right? When you go to a realtor and the realtor shows you a property, then you go to a different realtor because they're going to show you different property as well. Now, whoever actually finds you the right property, you're going to go to them. Guess
Yep.
what? The other person now lost out on you as a client, and they lost out on money. That's why many mortgage brokers, what they do, they want to charge you.
Yeah.
They want to charge you because they want to keep you, they want to retain you. Most of the time they don't charge you money, but they run your credit, because when they run your credit, you don't want to go anywhere else, because every time you run your credit decreases hard. Like
Yeah.
for example, 10 to 15 points just goes down easily at the end of that month, and that's how they retain you. And I personally don't like that. That's unethical in my books, is because I'm trying to help you find a home for yourself. If the information I'm providing is not enough for you, then honestly, I prefer you to go to someone else that will educate you more on that subject. Because sometimes what I see is, I don't want to force you to do business with me.
Right.
That's not how this business should be. Because if I'm forcing you, that means I'm looking for my best interest and not yours. And in this industry, there's so many people that are looking for their best interest, honestly, and not the clients. And I don't do business like that. I have 10 years experience, and it's great for me because of the fact that I built that relationship with my clients based on trust and not based on money.
Okay. Okay. So for my final question, and because since I know you for quite some time and we went to school together, what makes you different from all these other loan officers?
Thank you so much. It has been a long time, right, Lewis?
It definitely has.
I believe the biggest difference between me and any other loan officer would be the trust, building that trust. My phone is always available for any type of question. My emails are always available. Give it 24 hours, you will definitely get a response back. But one thing that's different about me than any other loan officer is the fact that A, I don't charge you money. B, free consultation anytime you need it. And even if you come to me today and you're like, Assad, I'm not buying a home right now. I'm thinking of buying it in the future. But I do have these several questions that I want to bring up to your attention. I will sit with you, have that conversation, give you a guideline of what your budget should be if you're looking or planning on buying a home in the next 5 years. And it's all for free. Yes, it takes my time, but I don't mind because at the end of the day, like I said, knowledge is power. At the end of the day, if I could build that relation and make sure you understand where you're going and what you're signing up for, is enough for me to say I've done my part. If you come back, awesome. Even if you don't, at the end of the day, I think I fulfilled. I did what I had to do to satisfy my needs, which is to educate. And that's what makes me different than other loan officers, where other loan officers are going to be like, no, I need you back here, sign a 6 months contract stating that you are not going to go to any other loan officer but myself. And if you do, there is a penalty of 1% or 0.5%. And I don't do business like that. I think that's what makes uh, me different: communication and making sure the understanding is there and the trust.
Okay. I do definitely appreciate that because, getting anything for the first time, car, a house, a property, a
Yep.
building, let's say, it's very
Tough. It's
tough
even
and
if you go to an
scary.
auto shop, it's
Yeah.
tough to trust any auto shop. Why? Because you don't know what they're really doing. And
Yeah.
that's why I always say, even for myself, if you're someone in the market for shopping, do your due diligence, do your research, and shop around. Because at the end of the day, it's free. So
Yeah.
go from bank to bank, broker to broker, and ask them these questions and feel comfortable with them. Once you feel comfortable and you know this person is there to actually help you, then you do the business. Till then, don't settle down for anyone.
Okay. Okay. I definitely appreciate all the information you've talked to us about today, and I would hope though that the viewers would, even if it's their first time or they've been thinking about it for a while, or even like
Yeah.
maybe they're still looking into it and they have questions that they didn't even know, or
Yep.
they didn't know what to ask. At least they're watching today and they're definitely like getting some good helpful
Yep.
tips, because we definitely appreciate some amazing tips.
Absolutely. One thing many people step back from mortgages is because their primary question is, can I really afford it? And hey, I'm here to help. If you have any questions just like that, can I afford it? Can I afford mortgage? Can I make a payment? Ask. Because at the end of the day, if you don't ask, you'll never get an answer. And you'll
Definitely.
always be renting. And in New York City, especially, and in America, especially, it's tough to
Oh,
rent.
yeah.
Honestly, if you live here, you work, you get a property. It's worth it.
Definitely, definitely. I definitely appreciate you, Asad. Definitely. I'm glad we've been friends for quite some time, and I'm glad you wanted to be on the show today. I'm really appreciative.
Thank you so much for having me. I've been watching your show and I'm a big fan, and I love the way it's developing. The development. I love the name. I love everything about this show. And I love the fact that you're out there helping people and just making sure people know one another. And that's the best. Even during COVID, I
Yep.
love it. Keep up the great work. Keep up. This station is awesome, and I know it's going to be big.
Thank you. Thank you. I really appreciate that. Where can everybody find you if they have some questions, or they're thinking about even getting a house?
I would say the best way would be to send me an email, or you could always give me a call. But I believe email is the best way to reach me, and my email address is unbeatablerate1 at gmail.com. So that's unbeatablerate1 at gmail.com. Send me any questions you have and expect an answer within few hours. And it's for free. Again, I say it's absolutely free advice for the mortgage world, because at the end of the day, my objective is to make sure you have knowledge in what you're doing and purchasing that dream home.
Definitely. Remember, people, is free. The capital FREE, free. Because if you don't like free, then I don't know.
I can't do anything better than free, right?
Definitely. I love free sometimes, and I will take any opportunity to take it if I can.
Absolutely.
All right. So as we wrap up our show, one more thing. Anything inspirational you want to tell the viewers today?
One thing I would always tell anyone that's watching is never settle down. Always, there's always options for you. So if somebody tells you this is the best thing out there, it probably isn't. Look around. At the end of the day, a lot of people twist words. That's one thing I've seen in my industry and in life in general. So never settle down, always explore your options and always ask. If it's too good to be true, it might be. So with that being said, thank you so much.
Thank you. Thank you. I really appreciate it. Everybody, you can find me on Instagram. It's underscore official. Definitely leave us a like, comment, subscribe. We really appreciate that. Follow MDMC on
Yeah.
Instagram and Facebook, and there'll be more content coming. Everybody have a good rest of your day.
Thank you so much, everyone.
You're welcome.